The war in Iran and the wider Middle East is causing huge volatility in commodity markets, not least agriculture. To unpack how this is unfolding, I'm joined by Principal Analyst for Food Retail and Manufacturing, Aled Thomas. I'm Peter Storey, Head of Prices for Food and Agricultural Commodities. Aled, how are you doing today?
I'm fantastic, thank you, Peter. How are you?
I'm also very well, thanks. So I thought we'd firstly talk about shipping and the immediate concerns to food security in the region. Then I think we'd pivot to what's going on within fertilizers and the impact that constrained supplies might have on production, specifically in the Northern Hemisphere. And then lastly, just talk about wider macro issues. So starting with shipping, what exactly is the situation with regards to the Strait of Hormuz and just freight rates in general and how they're impacting both the price of food and even the availability of food in some places?
Well, freight rates have been extremely volatile over the last couple of weeks. They've seen some highs. They've also seen some relatively lows in comparison. They haven't remained consistently high over the past few weeks since this war originally broken out. But there's certainly a lot of uncertainty in that market as to whether this is a short-term issue in the Strait of Hormuz and in shipping in general, or is this going to be the new normal? Is this going to be long-term and shipping costs need to rise? Of course, shippers don't want the extra liability of perhaps their ship being blown up as they pass through the strait, so there's extra insurance costs or just extra costs in terms of timing for them having to divert around another way where possible. So that immediate impact in terms of how that's affecting flows and commodity prices, we're not seeing it quite at the moment, but of course it does depend, as shippers are saying, is this a long-term issue or is this just a short-term issue that is going to sort itself out in the coming days and weeks. I think I had perhaps one view this morning when I woke up that things might be calming down a little bit, but just an hour before us coming in here to record this podcast, I see President Trump has threatened more strikes on Iran, which makes me think that this situation is going to continue to be volatile for the weeks and potentially months to come. But what shippers and food companies, etc., are actually trying to do to mitigate some of that risk is use other avenues where possible to divert products. We're seeing higher use in terms of air cargo being used, but that in itself, of course, will limit the availability of air cargo and drive up the price of that as well. So whichever way you look at it, there is going to be a significant impact in terms of upward costs on shipping for our food commodities going forward.
Okay, and in terms of those costs, certainly we've been talking about the Middle East region and ships getting in and out of there, but is this also having an impact on the cost of transporting agricultural goods more widely, more internationally? Like, for example, if you're trying to get soybeans in a bulk vessel from Brazil to China, is that also likely to cost more in the near future?
Well, shipping markets are, of course, free commodity markets. They will move up and down with in one place as they do in others. But I think the key thing that is really affecting prices of shipping going up all over the globe is the fact that crude oil prices and diesel prices and prices for the things that fuel these ships are absolutely skyrocketing, which means that ultimately they're going to have higher costs whichever way you look at it, as well as those extra liabilities from things like insurances, etc. So it is, despite the Strait of Hormuz being a relatively small part of the world's ocean, it is having a huge part across the globe in terms of shipping costs.
Okay, thank you very much, Aled. And then, so moving from shipping to fertilizer, of course, so much of the world's fertilizer is produced and exported via the Strait of Hormuz. What exactly are the implications of so much fertilizer being stuck in the Gulf, not able to get to the markets that need them, especially, of course, in the Northern Hemisphere where farmers are, relatively urgently needing it?
I think the issue with fertilizers is probably one of the most underpriced in terms of how big of a deal it actually is going to be, specifically for the Northern Hemisphere, as you say, going forward. Because without fertilizer, it's at the start of the growing cycle. You essentially cannot grow the food to the quantity that we do grow in the Northern Hemisphere. We heavily rely on fertilizers. We wouldn't achieve anywhere near the type of production we have for any of our products really without it. But it's not a case of something that if it came in 3 or 4 weeks time or 5 weeks time that you can back post the amount, and it is a case, it's so time sensitive. That is the biggest concern. We're seeing the UK is being being hit massively as well. A lot of UK companies are telling farmers that they're only honouring orders that were placed sort of last year. They're not taking new orders, and that will be if that effect, or that ripple effect of not having that fertiliser, and particularly for countries such as the UK, which doesn't produce the quantity of fertiliser locally as it did previously, it heavily relies on imports. It's going to see a huge backlog in terms of getting that fertiliser to farms, but also the cost of it when it gets to those farms, and ultimately the cost of the produce will be higher, which will mean eventually down the line, although we're talking perhaps 12 months down the line here now, the cost of that commodity produced will be higher for the consumer as well.
Mm-hmm. And I mean, for some Northern Hemisphere geographies, is it possible that it's not too late to see a shift in what is planted to products which require far less fertilizers, like soybeans and other legumes?
There is some shifts happening already. Australia is looking like it's moving towards growing more. Wheat is very nitrogen intensive, but of course it's less intensive than some of the other commodities. So there are shifts of people perhaps moving from, in some countries, to wheat instead of things like corn. And in the UK, people moving from wheat, which is probably one of the most nitrogen intensive crops here, to things like barley and oats, much less nitrogen intensive. There is, of course, the possibility, as you say, to go to the legume route, but that only really helps with nitrogen fixing, of course. It doesn't actually help with the other fertilisers, the key things such as potash and phosphorus, etc. And it's really, a lot of those have to be imported. Actually, the nitrogen element we can usually get quite easily from sort of Eastern Europe, and we can produce it here in the UK via the harbour process as well. So it's some of those other things. While you can mitigate it slightly by changing your crops, it's definitely not too late here in the UK, and it wouldn't be too late perhaps in the US as well. But realistically, farms are set up for growing certain types of cereals, and it's not a case of changing on the day. They would have to order the seed in, and there's
far more fundamental a change,
finite amount of seeds, etc., that you can plant. So still time for some manoeuvring, but most people will be tied in what they've planned.
More the margin of error, I guess, in terms of what gets changed.
No, absolutely.
Thank you, Aled. And it seems like certainly in the short term, agricultural futures markets haven't really spiked in a way that maybe some people would expect. Why exactly is that the case, and could it change in the near future?
I think the likely reason that is the case is because stocks are relatively ample at the moment. There isn't, if this had happened when there was a poor couple of growing years and their stocks were low, the reaction would have been much different. But the fact that we have had some very good growing years over the past 2 or 3 years has meant stocks are higher. There's a bit more of a cushion there, and the projections really are that crops are going to be good again in 2026, particularly in the southern hemisphere. So the concern isn't there at this moment in time, but of course, again, it's a case of how long this will continue for, and if those crops don't get that fertiliser they need, those original predictions of bumper crops could turn into some quite poor crops in 2026 as well, which will have a kind of double impact on things in the future. So nothing jumping at the moment, but again, it's a case of we'll see in a couple of weeks, couple of months, how the markets are reacting if this is continuing.
And fingers crossed for the southern hemisphere crops, of course.
Yes, absolutely.
Well, thank you, Aled. And then lastly, I was due to ask about macro factors. So what impact is this whole situation in Iran and the wider Middle East having on global inflation, for example?
Still, inflation figures usually are a month behind, so we're still not really seeing the effects. One of the only main countries that have come out so far to say it is having an effect is Europe. Eurostat have released some of the latest figures, and it is looking like the March inflation figures are much, much worse than predicted. Understandably, with the rising cost of things like jet fuel, fuel for cars. But then the backlog that we'll have down the line, of course, is the processing and production of these commodities, or any clothes or food commodities that we see that are processed. They're going to also have those rising costs, as well as the rising production costs, and eventually food inflation is likely going to pick up, which is against perhaps the prediction we made originally back in December from S&P Global, when we said that food inflation would be tame in 2026, but of course at that time I don't think we were predicting the Iran and US issue to happen. What we will see as well, of course, is the consumer themselves having to pay more money for fueling their cars. It means that they're going to have less disposable income, and the likelihood is we'll see a big drop in food spending or non-essential food spending, so sort of the bare minimum spending, and banks likely holding interest rates much higher as well, while there's still a lot of concern out there. So it'll take us perhaps a few months to really see it filter through and get that impact, but it's almost certain that inflation is not going to be tame anymore in 2026 and will likely rise relatively considerably, but depending on how long this war continues on.
And I've not really heard it mentioned too much in recent weeks, but the big R word, recession, I mean, is it likely that countries like within Europe or even the US could face recession because of a potential contraction in the economy caused by this conflict?
Well, there isn't much buffer in places, certainly like the UK. I think where the latest figures were only something like 0.1% growth. So we're hardly in the much of a buffer zone if we were to go into a recession, particularly here in the UK. But I think the term recession, or the technical term for recession, I think is 2 quarters of contraction. So you would have to have quite a considerable period of time to actually refer to something as a recession. But it is absolutely a possibility. There's so much of everything comes from things like oil and oil prices, and while things may not be directly involved in oil production, the result of power, which we obviously use that oil for, is everywhere. And I think it is very likely that we could see some countries perhaps slipping into more of a technical recession, as they would call it, rather than a full-blown recession. But again, it depends on how long this war continues. I think last time I checked before coming in, crude oil had hit back up to $110 a barrel again. And that seems to be hitting that mark much more now than it was perhaps a couple of months ago, when it was sort of down around the $60-70 mark. And if it stays at that and remains elevated at that without significant support from governments, people are going to really feel the pinch, and we might see a big contraction in GDP.
So really, the most immediate effect that we've seen from this conflict, certainly sitting here comfortably in the UK, has just been at the petrol pump. But really, these other factors which we've talked about so far, like the contraction in fertilizer application, also just the availability of shipping, these will all steadily creep up to have more and more of an impact on, well, I mean, not to over-dramatize it, but our everyday lives. Yeah,
well, we've seen those, like you say, the immediate impact is what people are doing on a daily basis, putting the fuel in the car. But even if the war were to stop today or tomorrow, we would still have seen a negative impact from everything that's happened over the last 2 or 3 months. But it would take us some time for it to filter through the supply chain. Of course, many supermarkets and people will have contracted values that they are buying commodities in at, and it's as and when those contracts come up for renewal, they'll see the jump. So we may not see it in the shop at the moment, but it is likely to come at some point.
Thank you, Aled, for those closing remarks. And thank you, everyone at home, on the commute, or in the office, for tuning in. Hope to see you soon.